Let's get down to the New York Stock Exchange and check in with Jim Cramer about this. Jim, we know inflation is here, but I think when you see numbers that are this stark, it makes you start to wonder what the Fed will do next and where we're headed.
Absolutely. I mean, look, if you take a look at Nasdaq, Becky, what that's saying is you can't own these stocks. That the Fed's going to tighten, not the Fed's going to taper, the Fed's going to tighten. It's good, actually, if you want to pick among the rubble here, because they're really reacting already to what the tightening is going to be. And that's pretty positive, because you got to flush out the weekends. You got to flush them out. And one of the things that's like, if you look at the Nasdaq, the stocks that are going down are the ones that are sold at a multiple to sales, not a multiple to earnings. And those have been very frothy. And the froth is coming out of this market even without Powell. Geez, Okta, look at these. I mean, this is unbelievable. I mean, some of these companies are very real. They're very good, but they're very expensive. And so the air's coming out of them, and then we'll take a look at them after the meeting, but not before. It's just it's pretty harsh out there.
Hey, Jim, even before, I would say before the losses we saw today, you were talking about the Nasdaq only about 5% from an all-time high. So
right.
You're still talking about valuations that have come a long way in a long time. If the Fed does raise rates, where do you tell people to go instead?
Well, I think that you need to be in companies that make things and do things. Yeah. The companies that actually, I know that sounds simplistic, but when you take a look at a lot of the companies that have gone up on the Nasdaq, and you ask people what they do, what they make, I think people are very hard pressed. I mean, I bet you 90% of our viewers don't know that Okta is the identifier in cybersecurity.
Right.
I mean, some of these stocks have been trading. Snowflake. I like Snowflake very much, but I'm sure people don't understand what Snowflake does, other than the fact that maybe it's weather-related. It's like 5 below weather-related. There's just too many people in there in this market who don't know anything. But I don't mean to be cruel. I'm just saying that when you look at the meme stocks, I mean, is GameStop worth half of what Best Buy is worth? I don't think so. But people wanted it when it was worth more than Best Buy. So you've got the meme people being flushed out. You have anybody who sells at price to sales going down. We had a couple of these. We had something like this happen in 2014. Something like this happened in 2016. There have been way too many companies that have come public. They don't stop. The flood of equity has to stop before these companies break down. And there's just no end to it. But it will end. And when it ends, it will be good for us, because what we'll do is we'll look at all the stocks that have come down a lot, and maybe we'll pick at some of them that are going to have good numbers.
But you're saying it's too soon to catch a falling knife here, though?
Yeah, well, I mean, let's see what Jay says. But look, a lot of the stocks I really like, NVIDIA, you take a look at Advanced Micro. They're coming down, and there's really nothing going on. I sold some Advanced Micro for the charitable trust at what I thought was a reasonable price in the 170s, 180s. Now I look at it, and it looks like I was a genius. No, I just felt it had gone up a lot. I think NVIDIA is fabulous. At 320, it's fabulous. At 230, it's fabulous. But what's happening is, Becky, the air is coming out of the Nasdaq. And the money is still going to the J&Js of the world, because they make things and they do stuff. And that's my mantra. Make things, do stuff, or go. And that means there's a lot of companies that you have to go. A lot of junk that came public. 390 companies came public this year. Probably like 10 are good.
Shepard Smith here. Thanks for watching CNBC on YouTube.